everybody. It's 6 o'clock. I'm going to get started here, and we're going to talk about VWAP, which is volume weighted average pricing. So the market as a whole has moved from individual traders pressing buy and sell to large institutions and algorithms buying stock. So it's not one or two shares over here. If you look, this is our Thinkorswim platform, looking at PLTR on the right hand side here. This is some level 2 data. 500 shares at $28, it's 15 grand. That's not typically a person buying that. That's an institution looking at, especially when you get in the thousands here. A pre-market and aftermarket data is a little bit slower volume, but you can see over here this 5,500 print. That's algorithm and big institutions purchasing, as most folks don't have $100,000 put into one trade or one equity. So why do we care about VWAP? So VWAP essentially is the average price at that particular time frame, what's going on. So if you're below VWAP, think of VWAP as a rubber band that brings price action back to it or price action above it. So if you're trending below VWAP, we know those algorithms, those institutional buyers, which is really what controls the market, is sending the market down. So you never want to be long an equity on the short intraday term if the market is moving down. VWAP is telling me we're moving down, so we need to get out of here. Same thing on the upside. If we're breaking above VWAP, we don't want to stay short that because we're going to get crushed. So at that point now, it's an opportunity for us to go long. And we can use, a lot of folks just use VWAP itself to turn that, but you can use some other indicators too, like RSI and some other things to kind of help see where that direction is pushing. So we'll talk about that a little bit too. So VWAP also works best with volume, right? So the more volume we have, the more likely we are going to get a continuation of a push to the upside or the downside as you're making a trade. So how does that affect our decisions? And we're making VWAP trades. Our decisions are made based on volume. So if you're trading something that has little or no volume to it, you're not going to get pushed through, as you might be the market maker. An example of that is LGIQ. And there's some other ones too that I've seen some people in our group put their information up. So it's not a good trading platform or an equity to trade if we're looking at VWAP. And the other piece with this is when I trade about anywhere between 500 to 1,000 shares of something when I make a trade. So I need good trading software. Thinkorswim, Schwab, TradeZero gives me an opportunity to basically have one click, and like on a chart for Thinkorswim, you can right click buy or sell, get a confirmation and send that sucker off and be away with it. So these things really help me perform my trades when I'm doing it. So, and the reason why I primarily trade equities versus options when I'm using this VWAP trading is that I can leg in and leg out of my positions. So I'm never buying my positions all at one price. I'm never selling all my positions at one price. So if I'm legging in 1/3, 1/3, 1/3, or out 1/3, 1/3, 1/3, it's easier to do that than it is if you're trading some options. Unless if you're, some big ballers putting some real money into some things. And the risk isn't as great for me because I've defined my trade. I know where my stop losses are. I know where my expected price action is going to be, where I'm going to sell out of it, and I know my defined risk to reward. It's a little bit harder because of liquidity issues and the price movement of an option to get in and out. And so that's what I really wanted to bring forward this and talk with everybody about, is because I've seen a lot of posts in our group where people are concerned about being on the wrong side of the market and getting in and getting out of things. So if you're going to use options to trade this, which I do on Thursdays and Fridays for that week's expiration, and we'll explain a little bit more to that, is that I want all the implied volatility out of the stock and out of the option. I want to buy something at or near where the strike price is. So if I'm trading PLTR today and we open at 1620, I'm either looking at the 26s or 27s for the option, if this is a Thursday or Friday, for me, and then try to sell into that move. And if I'm looking at 27s at the open, they might be a nickel, a dime, or maybe even 15 cents. So I'm capturing all of that move. Whereas if I'm trading that on Monday or Tuesday, the theta is much higher, the time decay, and then also the delta is much lower for me too, so I'm not getting a dollar for dollar move. It's also important here to be, like we kind of looked at earlier with the level 2. Level 2 shows the market makers, which is some of the stuff down here: NASDAQ, EDGX, ARCA, BATS. All these are just fancy names for the big banks that trade things, whether you're Bank of America or JP Morgan and all this other kind of stuff. Thinkorswim doesn't have as good as level 2 data as Schwab does, but it still has some pretty good stuff on there. So you can see where the market makers are putting their things in, putting their orders in. Whenever I decide I'm going to buy or short an equity, I'm going to go ahead and put an order out right away where my targets are at, and I'll let that price hopefully get to that and walk myself into that. In order to short a market, what we're doing is we're taking that equity and I'm borrowing it from, in this case, we're using Thinkorswim, TD Ameritrade, and it requires me to have a margin account to do that. So that you have to apply for permissions to do that. If you don't have a margin account, you can't trade the short side. So the first trade of the day for PLTR really was a short, and we'll get into that too. And if I didn't have a shorting account that has margin available, that trade wasn't available to you. So how do I decide what I'm going to trade for the day? I build a watch list, right? So a list of stocks to watch. You can do some basic ones. Thinkorswim has some pretty easy things to move in here. You come over on the public side. There's all kinds of stuff in here. Analyst upgrades, downgrades, post-market, pre-market movers, top 10 gainers. These are all things to look at. The absolute best trade for VWAP is a gap up or a gap down with reversal. And once you get confirmation of what's going on, those pay out somewhere between 85 and 95% of the time consistently. If they're coincide with earnings, it's even better. So once we kind of build a watch list of like 20 or 30 go-tos, like right now, a couple of them that I look at are like JMIA, which is a retail. PLTR is pretty popular right now, which is a software cloud. Space, SPCE, EV side, NEOs, XPEV, FSR, and IPOs have been outstanding lately. So if you have a new IPO that's breaking all-time highs, they're moving up in like $2.50 increments. So if you're breaking 15, you're getting 17.50. If you're breaking 17.50, you're getting 20. If you're getting 20, you're getting 22.5. And it's just been outstanding. So if you can get on those trades and you see that and you have a top ticker or a down ticker or a scanner is another one people use, then that's definitely, something that we should be looking at. There's all kinds of market exuberance right now. So what I mean by that is today, for example, the market looked like a gap down. It was going to go lower, but immediately we got some signals right away that the market didn't want to go any lower. And about 10:40 or so, the Qs, stopped rolling over and they went straight up and they found themselves almost to where we closed on the previous day. And this is from some market exuberance stuff. There's a ton of free money coming into the market from the Feds putting some basically unlimited quantitative easing. The dollar index is going down or talking about stimulus. All these things are going into place, and that's what's causing these markets to go up. And on the technical levels, we've seen from some of the reports that we get from Katie and some of the other ones that we're looking at from the market guys and their weekly stuff, it's all outstanding. It all looks like we're at all-time megaphone tops, but the market still continues to go higher and it still continues to hit that. We're not moving in 3 and 5% increments up, but we're just chugging upwards. Some seasonality with that. So how do we know which way to go, right? Because it seems like I shouldn't be long a whole lot of things right now. We should look at VWAP, and VWAP's going to tell us if we should be long or short, a market from there. So that's some of the kind of the basics for VWAP, and why I started picking this stuff up, and I've learned this from a couple of folks. Zach Horowitz is one of them, and Kenny Glick. These are guys who've been trading, VWAP for, decades now, and they're very successful at some of the things they're doing. And I picked it up. I want to bring it along to you. So, does anybody have any questions so far? The things we talked about. All right, moving along. So, Thinkorswim basic VWAP chart is going to give you these three lines, right? And this is 2 standard deviations above the blue line here, which is VWAP. This is 2 standard deviations below. This line in the middle is a multi-day VWAP. And I'm going to give you all the code for multi-day VWAP. So if you come over here to your setup, open shared items, shared item URL, it's http thinkorswim.mx/ and it's KNCSANE. And then you click preview, and this is going to be a Thinkorswim script study, open shared item. And when you hit create new on here, you want to name this appropriately. So this one I named multi-day VWAP and hit import. And then when you come over here to your charts, and you go on to your, you'll have to add this into here, what you're looking at. So I have their embedded VWAP. I added my multi-day VWAP, and I keep on RSI also. So let's get into some trades that occurred today. So yesterday, or excuse me, the pre-market, if we look at our 5-day chart here, it's going to show that I'm going to have to reload my chart here a second. But it showed that we had a gap down, right? So this was Friday. This is post-market. We gapped down in the morning, and then we made our way back up. Let me load these charts back again. All right. So we saw a gap down from the day. A gap down to me seems like at some point I'm going to have an opportunity to buy this. Again, this is especially prevalent on earnings days and any other type of news that was going on. And FireEye was an example today, and that's what I traded. So let's take a look here on your 1-minute chart. So as you're coming in, you get to your opening bell. Well, with PLTR, you had pre-market trading that was going on too, right? So we had our low was made here. We came up to VWAP, bounced off of VWAP, retested VWAP, came above. We saw we struck down again, retested, came above VWAP here, and then we started going here. If you're trading on Charles Schwab, they kick you out at 5 minutes still, so I don't really like trading pre-market on them. That's where I normally do most of my equity trading. So I was out of this move here completely, but the opportunity was still coming about to get a little bit. So actually, there wasn't a trade in here on the upside. So if we have your opening candle, which is here your high low, I'm looking for my next candle to break this in one direction or the other. So I didn't get a complete break of the candle here, so I'm not really ready to buy yet, but I'm above VWAP, so I'm looking for a long. If this inside candle would have been above, then that was a buy. So we come back down, we retest the VWAP. We didn't break all the way through here. We got a slight little bounce, but this candle right here at 943 is telling me that I'm in the short zone right now. So let's talk about some price levels. Price level number 1 is is right here, right? So my first stop is going to be the top of this candle. And then maybe number 2 is going to be looking at probably somewhere right in here. So those are my 2 outs. And as I'm coming down, I get a bounce off the multi-day. I retest the VWAP, and then we're coming back down. So my next sell is probably going to be at the bottom of this candle as we're coming back down. And remember, I'm not selling all my position in at one time. So I'm selling into the move here around 26, which is a nice hold number. And I'm coming back down here like 20, and I'm continue to trail my stop as I'm coming down. So 26 or 560 area. A little bit of technical work here. We see a double bottom or a coming right here. So now we know that we're going to come back up, but I don't have to get all of my position out of this trade until I break back over the VWAP. And we see coming in here, I'm in my midday chop. So I'm chopping back and forth. If you don't want to work through this chop and have patience, so that's fine. You can get out here at the VWAP. And at the end of the day, we're seeing this is a huge buy again too, right? So 11:30 time frame, we get a break. I'm looking at this roughly the same thing. Use the multi-day here as an out. And as we're coming up, we're not getting out of our position all at one time. We got this chop roughly half a deviation above. And now we're going up here to retest some new highs and just continue to trail my stop at or my support lines as we're going through the day. And this was a great day for PLTR traders. So the fire eye, we had this stock has been on fire lately. So basically you just had to get bad news, to come into the market, which was they screwed up. And they had a breach of security in their security software network. And so they had a gap down, as you kind of can see in here. But you see this place has just been like parabolic. It's just been on fire since the bad news came into play. So I was looking at PLTR this morning, and I didn't trade it pre-market, so I felt I kind of missed my opportunity here. No big deal. It happens, right? There's lots of opportunity in the market. So opening candles, let's take a look at that. So the bell goes off here. I got opening candle here. This isn't doing a whole lot. Still not quite over the VWAP. Boom, I get my break above the VWAP. I get a break above this VWAP candle. My stop comes in right here. And we're off to the races, right? So up and up and up and up. So I get my check mark here, which has come back to retest the VWAP. This trade is refreshed now. So my next stop comes in here. I'm taking a little bit of profit here at the 1874 range when I bought in at 1850 range. And I took some more profit at the whole number of 19. I had 500 shares on. I sold 100 here at 1875. I sold another 100 at 19. And I'm looking at 20. And then I'm letting the rest of the stuff ride because I already have my day's pay and my profit in here. So if I wanted to, my day's pay could have been done with my day at 10 o'clock. And I pretty much was. I had a trailing stop at 19 break right here. So just below VWAP at 1970. And I got stopped out here. No big deal. Again, those are still profits. And my trade was done. But if I would have stuck around for the day, this 12:30 break again was an opportunity. And again, we just tested VWAP, and I get out of all my positions every single day in cash right now. With the market being crazy how it is, I'm not interested in that. I'm just looking for a day's pay every day, and for me, that's anything above $300. So if I'm trading roughly 300 shares of something, $300 means that I have to move $1. If I'm trading 500 shares of something, I need it to move 50, 60 cents on average. So I'm trading 1,000 shares. I just need it to move 30 cents. So Like you can see here, like with the space, they just printed 1,360 shares. So someone is still paying, has put some big money into here. Space is another opportunity too that came about. So we saw it below VWAP. It started to break out of VWAP pre-market. I missed this move pre-market, but I was hawking it at the open. So we printed this red candle. We had a beautiful engulfing candle here above the VWAP. I didn't even wait for the next candle. I went and took it right here. And again, we're off to the races. So I'm at 20.50. My out here is at $24, and we're running up, and we're off the way. And we made 50 cents right here. So 50 cents on 1,000 shares is $500. So we come over here to the VWAP. We break below the VWAP. So whatever else is left, I'm out at 24.53 because we're breaking below the VWAP, and no one wants to say short stocks that are breaking below the VWAP. And then we chop a little bit. Nice engulfing candle here, and down we went back to retest the multi-day. We came out of the multi-day. This is a nice rear end bottoming pattern. You get a couple of butt cheeks here and up. So you could have bought the break here also. Come back, retest. This trade's refreshed, and off the races. Really, after this candle right here, there was no reason to sell space at all as you're going throughout the day, because you're staying above, and maybe at the end of the day at 15:30, you kind of came back in if you didn't take any profits over here. So that's kind of VWAP trading as a basic, some of the things that I've been doing every day, and it's easy to get in and out. These things are a little bit more liquid than what we kind of do with options. I still do trade options, and this was a great opportunity today, actually, with VWAP. If you want to talk about the options play too, with QQQ. So again, same type of piece. We're gap down, so automatically I'm thinking on a gap down. At some point, there's going to be a bounce today, and that looked like we're getting a bounce right away. We broke the opening candle, we broke the opening range, so there was a buy here. Using your support, you're looking at half numbers and whole numbers as you're coming up here. We got to about 38, and then we rolled back over, came down, broke below the VWAP. So we don't want to stay short or stay long stocks that are breaking underneath the VWAP. Came back and retested it and went all the way back down. So we saw this actually was a nice little drop today to 303, 304 range. We came back up. We broke above the VWAP again at 305.75. Stop is at VWAP, and you had a $2.50 move, to the multi-day and then some. So again, if you're trading options on here, VWAP, can definitely help you with that move too, if you're trading indices. So it's a great tool. I've been using it. If you're not sure on how to kind of, if we're going to get a chop or not, so an RSI can kind of tell you some of the chop stuff too. Over here, we got an RSI is getting pretty close to an oversold, so we kind of can expect a chop to come back up before you make a next leg down. And that's the same piece here. So you're getting a little chop up, a little chop up. You get some divergence here, so you think that eventually you're gonna make a turn, just a matter of when. So you can use your tools to kind of help you with some price action too. What's going on, Rob?
Hey, what's going on? So I have a couple questions.
Sure.
Number one, how do you know if it's going to push through the VWAP or if it's going to stop at the VWAP and change direction?
So absolutely. So you're talking about follow through for everything. So I'm looking for confirmation in the morning. Typically, you're going to get follow through, right? Because there's the higher amount of volume that's going on. You're going to get a higher chop. So I try not to trade that first 5 minutes. If I can avoid that, it's going to kind of help the chop get out of it. But if you want to trade that, which you can, but you just have to be careful about doing that. So you're not going to trade that opening candle. Let's use the Qs, for example, here. So we have this opening candle on the VWAP. So this pattern typically is going to tell me that I'm probably done putting some lows in. I break above it, so I can take an entry here at 307.30 range, but my stop then is going to be at this lower candle at 306.21, and then kind of see where that takes you. And you got you know, almost a buck, 70 cents, 80 cents here. And you're coming back down, you're retesting, you're at the VWAP. You can use RSI here to tell you probably got a little more room to go down.
So let's go off that opening trade then, right? Those
Okay.
calls above the VWAP, and then you just go. Is that Bollinger Bands, right? So you take it up to the top of the Bollinger Bands or RSI for the sell there.
This is 2 standard deviation off of VWAP, which
Okay.
is a standard built in for Think or Swim. And then I gave you the multi-day also, which is a proprietary code, which is not normally in Think or Swim.
Yeah. So tell everyone the difference between or how VWAP is calculated and why multi-day isn't the best indicator.
So multi-day is a tool. Multi-day is going to be the average of 2 days worth of VWAP. So where VWAP is the last 24 hours, think of multi-day as the last 48 hours. So that's not something that's normally calculated, but it is important because I have a ton of trades that I do, which is literally blue line to orange line. So QQQ is an example of it. If I'm below the multi-day and I'm below the VWAP over here, because we're in a bull market and we printed these lows, at some point I'm looking for confirmation for us to come back up here because we're in a bull market and we're going back up. And hey, guess what? Boom, we made it to 308.30, right? So as a trader, I am not looking to get call tops and bottoms, right? I'm gonna let the market do that. So what I can tell though is the probability of where the market is at and the things that are going on based on my tools and my indicators and things that are going about. So VWAP is an indicator for that. VWAP tells me if the market looks like it's moving up, VWAP looks like the market is going down for whatever equity that I'm trading. So if you're looking at QQQ or SPY or anything like that, those are the things that are going on. So I'm looking for reasons to buy. In this particular case, because I'm already gapped down, I know I'm in a bull market, and I know there's tons of market exuberance going on. There's all this money that's being put in a thing. The likelihood of us moving down for a significant amount of time hasn't existed lately. And I'm the bearest of all bears that you've all ever met. But I'm just saying this is the stuff that we're seeing right now. And if we continue to remain below VWAP, and it's showing that we're supposed to be below VWAP, then I would stay a bear. But right here, starting at 10 o'clock, and you're moving through 10:30, you have divergence going on your RSI. So that tells me the market wants to start moving in the other direction. So I'm looking for confirmation, from this. And where do we get it? We got it right here with this hammer pattern. And then we started moving up. We started breaking some ranges. So you don't have to get into this trade until you break the VWAP here. You can get into the trade sooner if you want to, but as you're breaking these ranges, like you probably this check mark back probably could have been an indicator for you as you broke the range here, and you have a nice check mark back that you're going to probably make the move up to test the VWAP at a minimum. But remember, VWAP it's like a rubber band. So the further away from you are from this thing, the more likely you are going to get moved back to it. So if you're 1 standard deviation away from VWAP, think of it as a power of 10 trying to attract you back near. If you're 2 standard deviations away from VWAP, think of it like you're almost a power of 1,000. The likelihood of that's going to try to make its way back to the VWAP, especially on the lower side right now, being in a bull market. So does that help at all, Rob? Did I answer that question?
Yeah, the only question so VWAP, it's not 24 hours, right? It starts at the open of the day. It's only for that one trading day.
The 1 minute VWAP typically is from the open of the
Right.
day, runs all the way through. Here's best example. Let's look at the day prior.
I guess my only point is
So the day prior starts. It
yeah.
returns up at 9:30 in the morning, and it's coming through here. We have our aftermarket stuff, and then we gap up, and it restarts from the day. As
Right.
much
I was clarifying that because you said it's 24 hours. It's actually from the beginning of the trading day, right?
right. It starts at 9:30, and it works through the last 24 hours worth of data, starting at 9:30 in the morning as it moves forward. The multi-day VWAP takes into place the 48-hour piece.
Okay.
So
And
it's looking at
that's that one. There's a couple different ones for multi-day, right?
this is the one that I use. Again, it's proprietary
Okay.
code. For everything. You're not going to find it anywhere else. I shared the link with everybody on the video for it, so you're welcome to use it. Not something you're going to find anywhere else. And I haven't seen it exactly the same everywhere else. And there's a difference between platforms and coding too, right? So Thinkorswim's code is different than PineScript, which is what's on TradingView. And from all the coding nerds that I know that have written all this stuff and moved along with it, it just doesn't work out apples to apples. So even the VWAP itself is slightly different on Thinkorswim than it is on some of the other platforms. So it's within a few cents here or there, but just know that it's different. And like the high-low close 3, which is what I use on for the trading view. So that's not, I mean, that is VWAP, but it's not exactly VWAP because what it's not taking into consideration, just taking consideration the average of it is really what it should be is if you have a $19 candle to a 19.25 candle, if all the volume is at 19.25, that should be the value of that candle for VWAP consideration, not the average of it, if that makes sense. So, because we're concerned about the volume and the price for VWAP. We're not concerned about at one point in that time, someone bought something for $19 and something bought something for 19.25. We wanted to know the price average of that candle based on the volume. So obviously, if there's more volume involved, there's more either buying pressure or selling pressure for that equity to move up or down. Remember, this is working on the algorithms of the market and how things are rigged towards the algorithm of the traders and the big institutions. And our little, even if you're trading 1,000 shares of something, the likelihood of you moving the market on 1,000 shares, if we're talking about things that are trading in the millions for a day, is infinitesimally small.
Okay. Yeah, I just want to clarify that the VWAP starts in the morning and then also multi-day. It's different on different platforms. So that was kind of what I just wanted to get put out. The other thing is, can you go over so like right where your cursor is right there, that low 303. Show everybody, I guess, where that buy signal is. So is it because I mean, is there a couple of them there then? I mean,
So
based off of go ahead.
yeah, I 100% understand where you're going from. So let's talk about the short here, right? So, and then we'll get down to that portion. So if I bought the open here for Qs and I get through here and I get a bounce off of the VWAP and now I'm breaking below the VWAP, now I'm out of my long position, right?
Right.
So technically you could go short here also. So this candle breaks VWAP and I'm buying on this candle. So what's my stops look like? The candle beforehand would be one stop. So somewhere right in there. And then where's my other set of price action? It'd probably be somewhere over here, and then maybe a third stop was somewhere up in here. So those are where my 3 stops are. So as I'm breaking down VWAP here, get here, it's moving against me. None of this really breaks over the VWAP, right? And this one might have closed and started to scare you a little bit. But there isn't a definite, I'm out of the short position here yet. We continue to move down. We retest the VWAP a little bit with this wick. And now we're moving in the direction we want to go. So looking at price action, if you want to talk about RSI here, you might want to take, something off the table here. If you're in the options specifically, you're at 2 deviations away. I would take 1 contract off if I had 3 here. Okay, so now we're letting this ride, and so we took one off here. Now I'm going to take this, and I'm going to take my stop, or my first stop at least. Is gonna start heading on down. So maybe I'm taking the bottom of this candle here as my next stop. And then obviously VWAP and then the one beforehand. So we're kind of trickling down here a little bit more. I'm letting this breathe a little bit and my price action starts to move sideways a little bit here. If you're in the option, so your price action moving sideways and depending what your expiration is, your theta starting to eat you. So you're getting ate up here. So if I start to see a chart with my option pricing on here, I'm getting eaten up here. That's another thing that's difficult about trading options is that if you're not in the move, then you're going to lose some money, right? So that's not a bad idea to take some profits as you're seeing that. And you can still let 1 or 2 contracts run if you're, so if you're running 3 contracts, I would have sold one here. I'm eating up this second deviation. I'm starting to come off the second deviation band here. Maybe I sell another one here, and I'm letting this one ride all the way back to VWAP. And then when I get back to VWAP here, maybe this is an opportunity to sell. I don't typically trade the indexes on this, so I'm not 100% good on the option pricing with the indexes, except for that short move period. And I would have been out that other way. It's probably why I'm not a good option trader with this portion, but this works a lot better with the underlying equity than it does with the option trade, because you're not losing any of that. And then on the other side here is I'm oversold here. Excuse me, I'm overbought here on RSI. So maybe I know that I'm going to spend some time in the chop zone here. We kind of saw that a little bit. We're chopping. We're not moving a ton here. We're only moving a few cents, and theta is probably eating us at the same time. Kind of moving back down, and we're looking at the VWAP trade. We got a nice bounce over here. Maybe we start getting back in over here with an expectation for us to move to the multi-day. So we're at 307-ish, and we're looking for a $1.50 move. And we get that $1.50 move in about an hour. So theta probably wouldn't have ate us at all here. And if you're worried about this because you're putting too much time in the market, another option too, instead of taking week ofs, you take 2 or 3 weeks out because theta is lower. It costs you more. But if you're looking to just make one trade, throughout the day, and it's always easier to look back, at an equity in history than it is actually to do it. And that's why I like trading these equities like FireEye, PLTR, Space. Excuse me. I did plug last week, things like that.
So
sorry, I'm choking over myself.
Hey, this is Chris. I got a question. So I'm looking at this almost identically like Bollinger Band trading. In the beginning, I mean, if you can scroll left a little bit, basically right there where it started pulling off that top deviation band.
Okay, at the open.
Yeah, right there. I'm looking at that like a Bollinger Band trade, and as soon as it starts pulling off, I'm gonna enter a short. And then as soon as I see confirmation below your center VWAP line, to me that says I'm doing great. And then off that, once it starts pulling off that bottom green, I would probably come out right there with I'd probably hold on to a couple contracts, but right where you have your low whatever balloon, right where it's definitely pulling off of that line, I would be out of there. So I guess my question is, what's similar and what's different about these deviation lines and Bollinger Bands?
I firmly believe, based on everything I've read, all the people that I've talked to that work in New York on the exchanges and have been professional traders for the big stuff, that the algorithms are based off of VWAP. They're not based off of Bollinger Bands. Bollinger Bands is a great tool, and I've used them before, but I believe the market works off of VWAP. And if you trade gap up, gap down, particularly on earnings, you're going to make money. That trade works not 80 to 95% of the time. And if you define your trade with stop losses and profit zones, then you can make a day's pay in the first hour of the trading day every single day. The day's pay to me is $300. So, and you can do that with between 300 and 600 shares on good companies that are not super expensive. I'm looking at things between $10 and $35 a share, and you can make $300 a day without trying too hard.
It's interesting to me. I think I'm definitely gonna take a look at it, because I mean I've definitely been following your trades, and they're usually pisses me off when I'm not in them. But but I'd be interested to overlay Bollinger Bands on those and see
Let's do it.
And see what my decision would be comparatively. You know what I mean?
Yeah, let's do it.
Because if they're even more accurate than what I'm using, obviously I'm gonna Use both.
Let's see. Add study, all study. Oh, let's see here. That's me here. This is your Bollinger Bands. Let's change the color of the Bollinger Bands. Let's call this. I don't know what's a good color here. This one's gonna go there. That's your midline. Lower band, upper band. All right, so Bollinger Band trade this morning. So you broke your upper Bollinger Band, or at least tried to break it, this morning, and you rode up here. And you got a rollover. So that's a potential short if you're looking at the Bollinger Band to go back to your 20 moving average, which is here. You broke your 20 moving average and you moved down to the bottom Bollinger Band. You made a return to your 20 moving average and you rode your bottom Bollinger Band to right here. And then at this point, if you're 2 deviations away, you're talking about possibly a long entry. You didn't make it back to the 20 moving average. And then you sold off again. So where if you're looking at VWAP, really your first VWAP was here, and you just rode the 2 standard deviation line down a little bit further, and maybe you got scared out a little bit, but everything else rode that. And let's say you sold a contract and you're getting off that at 304.17, maybe up here at 304.50 is where you came out of that trade. If you're following the 2 deviations, I have some other software I use that is proprietary and I can't share with everybody. I don't trade on the 2 deviation bands, but I know a lot of folks that do. I look at more price action and support and resistance lines. So I'm looking left all the time, and my charts are a lot messier than this even, as that kind of moves in. And I can share that with some of you on the side about how those prices look like, and I can punch in that right direction. I don't get any money from any of these folks. I can just tell you what I do. And you can contact me directly around if you're interested in looking at some of that stuff. But that's kind of how I look. And I think it's just a style of what it looks like here. Is there's definitely some opportunity with the Bollinger Band to look at some stuff, but how do you know? I was never as good at trading Bollinger Bands that I am at trading just even the 1 day, 1 minute VWAP with support and resistance lines.
That's what I was looking at. I was looking to see if I would have exited or gotten in sooner, and I think I would have stayed in the trade longer. This particular move, I would have stayed in the trade longer if I was just using VWAP, because I probably that first move up. If I was just looking to scalp something, I probably would have got out of the trade. Now, I probably would have stayed in that down move, the first big down move, and then as it came up there, I probably would have got out.
But VWAP is going to keep you in this trade, though.
That's what I'm saying. Like with VWAP, I would have stayed in longer, and it would have obviously been more beneficial.
Yeah, if you would have kept in the VWAP, you would have got here. Maybe you take your first profit here, right? And one of these candles over here, as you think a reversal is going on, and then you get up here and you're touching this, 20-day or 20 moving average on your Bollinger Band. But on VWAP, it's telling you that, hey, I haven't fully broken VWAP yet. The bears are still in charge here, and you would have got at a minimum, at least this ride down, because there's no candle even to tell you to get out of this. Right. And maybe this hammer type candle or cross or whatever candle this is right here would have told you to maybe, but then you got a second roll over here. And then you're kind of looking at some divergence here. Maybe this is slowing down a little bit, and really you just lost $1 from here to the low, and you might have a good portion that might have got eaten away and beta decay.
Right. Well, and honestly, if you're just looking for a morning scalp, that right where your cursor is, as soon as that started an up move, you'd be silly to stay in that much longer.
I mean, that's a great move. Even if you took that at the first VWAP break, which is 307, and you move down to 340.50, 340 or 304.75. That's a day's pay.
Yep.
4 contracts is going to pay you $400.
Especially when you're buying 100 contracts, Rob.
Who does that?
Nobody we know, right?
That's why I'll take. That's why I take the Bollinger Bands, because I'd rather get out and have my money sitting there most of the time. I'm not trying to stay in all the time. But no, this is good though.
Yeah, and almost honestly, so here it looks like I would have got in sooner with the Bollinger Bands, but I would have stayed in longer using VWAP. So I'm definitely gonna have to look at this more.
So well, let's look at the trade that I made today and a Bollinger Band. So I was all over this Fire Eye from the beginning of the day. Like I was hawking this sucker. So this is your Bollinger Band 20. So we're below. This candle gets crossed, and now right away at your first candle, you're at your upper Bollinger Band. So are you going to buy on the upper Bollinger Band at the open?
Right.
I don't know if I trade. If I was trading Bollinger Bands, but I took this trade all day on VWAP. And then, this is a great trade because you got your VWAP break.
Show me what you see on VWAP to enter that trade.
Sure. Let me get rid of this clear drawings and move all studies. Then let's just go. Those studies. All right. So this is just basic VWAP from Thinkorswim, right? This is the one everybody can get at any time, whenever they want. Markets gap down. Okay, so there was a nice gap down on the daily. The first print candle is some kind of doji looking thing. No, that's not bullish or bearish by any means, which is right here. And now we get an inside candle too. I have an engulfing candle, which I don't really care about right now, except I think it's going up, but I'm crossing the VWAP. So boom, I broke VWAP here. I'm moving on in the up direction. I broke my opening candle. So this is a buy right here. Broken the opening candle, broke VWAP. Here's my buy right in here in these two candles. So the first thing I'm doing is I'm defining my trade. So my first out is going to be the bottom of the candle that broke VWAP. My second out is going to be the bottom of the opening candle. And with this one, that's probably all I would do. So I'm off to the races. I get in, holding in. This engulfing candle starting to bother me a little bit. So maybe I'm selling into these moves too, right? So I'm at 1850. I'm probably going to take 100 shares off at $19, which I did, which is right here. So now I started this trade at 500 and I'm at 400 shares today. I get an engulfing candle. I'm cool, right? Because VWAP is where I'm getting out at. And then I have, and my this stop goes away, this moves up to VWAP. I'm taking profits, I'm moving up my stops. My stop is at VWAP here. We come down. I don't even kiss the VWAP. So this trade is recharged, right? As you can see it with the RSI. Yeah, I knew something's up over here. I gotta pause for a second. I get refreshed at the RSI. We're off to the races again. Again, I'm taking some more money as we're going up, right? So 1950 or 20 bucks is kind of the range I'm looking at. Probably 1950. I'll take another 100 shares off. So I took some off at 1950 and took another small load off at 20 bucks. So when I get to 20 bucks, again, stops at VWAP. and I put another stop at 1950. So I sold some at 19, sold some at 1950. I'm at 20, so I'm down to 200 shares. And then I have a 100 share stop at my last out, and I have a 100 share stop at VWAP. So I can let this ride. I didn't because I was in a hurry to go somewhere today because I was done trading at, I don't know what time did I text you, Chris, 9:45, 10 o'clock or whatever it was. I think it was 10 o'clock. So I'm like, I made my day's pay. I'm done for the day. I got some shit to do. Give me a call if you need something. But you could let this one ride in this particular case, and some folks did. I got stopped out over here. You're like, all right, that's not a big deal. I'll let this ride. I got my stops in. Everything's automatic. I don't got to think about nothing. Oh, but wait, I'm breaking above the VWAP over here again. So this is an opportunity because I'm trading equities and not options. I don't have to worry about time decay and theta. As that, I'm doing the same trade again, right? I'm probably putting my first stop here at 1971. And then I got another one roughly at 1950. And off to the races we go again. And at 50-cent increments, if I bought 500 shares in here at basically 20 bucks, 19 at 2050, I'm taking my first 100 off. And then 200 and 200 before. You know, come down here, still not out of this trade. And then we got to the close, and since I close all my positions at the end of the day, and I don't carry everything overnight for this particular type of trading, I probably would have sold around 2030. So there was 2 trades in FireEye today, and no reason to get out except for one time. We could have got stopped out over here. But from the beginning of the day on, this is a complete buy. Make sense? So let's compare that to just a straight Bollinger Band trade. All right, Bollinger Band trade. First thing in the morning, you're on the second band on the downside. So you're probably looking for a reason to buy, right? So maybe we get a buy signal, you know, right in here as we're moving towards the 20. And this candle immediately moves you to the second deviation above. So are you entering a trade here? If you didn't get in somewhere on the bottom, and this happened quick too. This was a complete bullish candle, and it was like a 10-second move on here because I didn't get in at 19 or at 18.15 like I wanted to. I had to move my buy up to 18.50 is what I got in at. So this was a quick bullish, huge print up, and we hung out here for about 2 minutes as everyone's figuring out. I got scared. Is this a buy for you, especially if you're printing this little candle right here? I don't know. I probably wouldn't have done that. You could have came back and had a discussion here, maybe on this candle right here, because you got the check mark and you moved up. So what are you looking at? A 1875, maybe a sell right in here at 18 or 1990-ish, 1980-ish, somewhere in here. So you would have missed out on 2050 and 2075. You could have got stopped out here also, most likely, on the long side. You got your squeeze in here. You're expecting to move one direction. Maybe this candle, if you're really diligent, but you're most likely getting out on this candle here. Definitely out on this candle. And then where's your buys from here? Like this is all just riding the 20 moving average. Maybe you catch a buy here, but you're already kind of towards the top of your Bollinger Band. Maybe right here you get 10 cents, 20 cents.
Yeah. So
So
I guess what I'll tell you is this: is that my understanding, and I've just been recently looking at this stuff. VWAP makes a lot more sense for day trading, and specifically for equities. It lets you it, and it does seem like you can get in a little quicker on the Bollinger Bands, on the couple trades that we just went through, and I mean that makes sense the for options in order to grab that huge price increase as they see that the shift in the pricing. So, um, versus when it's flat, you won't get that. You won't get
I think
that
it's
extra,
great for your opening trade.
you won't get that extra momentum, um, because the momentum's already been established. So that's, but it's interesting, and I definitely like it for equities trades. And I mean, I'm going to use it. I'm just going to overlay it anyways, just to kind of see how it goes. Because you're right, as far as exits go, it looks a lot smoother.
I think the entry is the important part too. So maybe not. I know with VWAP, especially trading equities, I know I'm on the right side of the trade. I don't have to worry about am I on the wrong side of the trade? What time of the day Katie's report's going to come into play? She's right most of the days, right? Like her hit rate on those reports is like 90, 95% correct. You just don't know what time of the day she's going to be right at. So, today, especially looking at SPY, like, I mean, they're covered at my price target for some things I had on SPY, right away, like down here in this 363 range. And I was like, oh man, we're going to have sell off here, right? But that's not what VWAP told me. VWAP told me right away, right here at 11:30 or something like that, they were breaking, we're going higher. And you had 3.5 points the rest of the day. So, it's not perfect. I don't think any indicator is absolutely perfect. But if you're looking at what's going on nowadays with algorithm trading and who's doing that, and we're just looking to do like what Steven tells everybody, you're just trying to catch that middle girth of what's going on. You can't find a bottom and you can't call a top. The market does that for us. But what we can do is take that chunk out of the middle, and VWAP helps us take that chunk out of the middle. So anybody else have any questions? We got Taco in here and Babs and El Jefe and
Hey, what's up, bro? Hey, so do you incorporate the Fibonacci, any kind of Fibonacci retracement or extension while you're in the middle of the VWAP or trading the VWAP?
So I like Fibonacci stuff, but I don't use it for VWAP trading. I'm not sure you were in here earlier when we were talking. This is when you replay the video for everything, maybe a multi-day indicator also for VWAP that's proprietary. I trade on, and I think I've sent you a screenshot of some of the stuff I trade on, but price action and if we're breaking underneath or above VWAP, it's going to tell me where to go, and I'm going to take profits at my price action, and I'm still leaving, 50 or 25% of my position on when the market rolls over with the expectation that VWAP is going to tell me when to get in and out of there. But I'm already have profits sold or in my pocket, and my goal for the day is to make my days pay. So there's some really good things with Fibonacci, and you do some great work on, like Neil, you did some awesome work on some other things. There's a place for it in trading. But for this particular trade with I'm using that VWAP to tell me where to go, and I'm looking to get some moves of $1 or $2 in one direction or the other, which really helps when you get that gap up or that gap down. You're trading on that, then an opportunity is there. So I don't need to put the work in for this particular trade with that, because there's really three types of trades we're getting at. We got the day trade, like for me, trying to get in and out here in about 90 minutes at most. You have a swing trade, maybe from one day to the next day or a couple of days in here, and then you have an investment. I think the stuff that you do and some of the other folks do on some longer terms is like Paco does some great work for some swing trades and from some investment stuff, and their work is spot on. But I don't need that to do my day trade for the 90 minutes. I can just use VWAP and be pretty successful. I can use some support and resistance lines and take profits at those particular moments. And if I don't have them because I have a blue sky breakout, and that's some of the things we were talking about earlier with IPOs, is these suckers seem to be moving at $2.50 increments. I can take half and whole numbers, which is some old school TA, and take my positions out a little bit at a time.
Nice, thanks. I like it.
Anytime, brother. Any other questions?
Hey, I might have missed it. This is Babs, by the way, and I might have missed the first one or whatever. Could you just maybe run us through one more? Just pick a random thing and run us through it one more time.
Sure, man. What did you trade today?
Oh, I wasn't really in anything today, so I mean, I was watching. I think some people were trading some Apple and stuff, but I mean,
Okay.
really, you can pick whatever you want.
All right, so we'll do 2 parts here, right? Because everyone seems to be interested in Bollinger Bands also in a comparison, to the two and how this is a little bit different. So we'll get some things knocked out. This works for again, this best trade is for a gap up or gap down in the market, and you're getting a reversal. So I'll use an example of FedEx last week. I think it was on a Thursday or Friday. That's an opportunity where I traded some options and I made some serious coin on that sucker because that's a $175 stock. I don't use this technique with $175 stocks because I don't have $175,000 to put into a stock. I don't have no Rob kind of money kind of deal, but I don't have an issue with controlling that stuff. So I can put in $400 or $500, take 3 to 10 option contracts, and still make the same amount of money on that. But it's a little more of a gamble because those options, you need to sell into those more as we know that things move along because you have to be right on time. So a quick Bollinger Band trade for Apple first. We have this opening candle. We immediately moved to the second Bollinger Band, and we're trending higher. So I'm not sure if I would have been able to purchase this or to decide to make this purchase at the open. So from say 125.50 to 126.50, I'm not sure if I'm gonna be ready to make that purchase. For rolling over, maybe I'm thinking about a short as at least expecting to the 20 MA. Get a bounce up the 20 MA, move to the second one. So maybe somewhere in here I might have been starting to get a little scared and get out. Or maybe I got bigger balls than I know and I kept it in. I don't know. The same thing over here. Maybe you're getting a little nervous here, with how these candles printed with these engulfing candles. Definitely could have possibly gotten a short in here. This looks interesting. As you come on down, and you're probably out somewhere over here. It really didn't break that second band at all. So best trade for Apple today looks like that 125.83 range into 123.72. $2 on the downside. And maybe you can catch this one here, maybe somewhere in here, 123, 124 range. I wouldn't have got shook out there until 125. Those are 2 pretty good trades off the Bollinger Bands. All right, so let's take a look at what the VWAP was said here. Opening candle, break of the opening candle. I probably would have been buying this candle. And it came up and you're rolling over here. I probably still would have held because my out is right here, based on the bottom of the opening candle. Broke through here. This is starting to get me nervous. I'm definitely selling a little bit when I'm getting down to VWAP. I get a kiss up, and I'm definitely out of my position here at 124.82 on the long side, 100%. Maybe would have got a little bit of profits in here. So we'll call this trade. Maybe I'm down $100 off of this one, $50 off of this one, depending on where you get your stops and where you took your profits from. 126 to, yeah, maybe I would have got one at 126.50. So that's 100 out. I would have sold. Yeah, I'd have been down in this trade for sure. On the short side, this is definitely a buy for a short. So my out is right here at 125.75 roughly, and I'm in right here. And definitely somewhere in here, maybe right here, the dollar mark, I'm taking 100 shares off. This is still all, I'm still not seeing a reason to get out of this trade at all. Maybe 124 range, 123.7. That's $2. And now I'm starting to reverse. I'm taking another one off here at this range break of 124.50 range. So that's $1, $2, $3, $4 profit. And then my last out's going to be here at the VWAP. So now I'm starting to think, well, I just broke VWAP. Now I need to go long because I'm a badass trader. And now you're thinking this, you're like, oh, I don't really like how this feels. I'm not really getting a whole lot of price action. It's the midday chop also. So be mindful of what's going on there and your patience level. Maybe somewhere in here, I would start thinking about maybe I'll get into a long position here. We'll call it 125.15 area. And then maybe at 125.50, I'm taking the first 100 off. 126, I'm taking another 100 off. 126.50, another 100 off. And I'm kind of letting it ride back. And I'm selling at the high of the day at 128. So there's 3 trades for me. It's clearly defined for the VWAP trader in here. The first trade, you probably would have lost in this one. You have an upside down ass crack here too, which is telling me we're going down. Again, not super technical. Sorry, Taco. I'm not as good as you are on that stuff, but just got the inverted butt cheeks. You got a trade here that's profitable. You got a trade here that's very profitable as the kissback is coming, and I'm selling at the high of the day because I get out of my trades every single day. So 1 minus, 1 plus, that's washed out, and this is a very nice trade. Answer your question, Babs?
Yeah, man. Appreciate it.
Anytime. Any other questions, thoughts, concerns?
Hey, bro. Hey, so you might have already mentioned this, and sorry if I'm bringing it back up, but how are you picking which assets you want to trade on a daily basis for everybody in here that they want to jump into this?
Yeah, man. So I talked about a little bit earlier. Is first thing you need to do is you need to build a watch list. There's all kinds of different ways to do it. Thinkorswim has a real easy way to do this stuff. If you're looking at your watch list, they have some public stuff on here, which is like some movers. Analyst downgrades to me are a buying opportunity. Analyst upgrades are typically a selling opportunity. It's just how the market's working lately. I can't make any sense of it. Post-market, pre-market movers, your top 10 gainers, top earnings, right? So, and you and I and a couple other folks have talked about earnings like crazy lately. Is I am not interested in holding earnings. I've had better luck lately shorting the underlying equity into earnings, but it's still a gamble. So why do that? Why don't you wait till VWAP and the next day tells us what to do? If we have a nice gap down or a nice gap up, so if we're gapping up, one or two things going to happen. You're going to get a check mark and you're going to get a gap and go. Super rare lately. Or you're going to get a move up and you're going to get a rollover and it's going to come back down. And I'm looking for my first target to be VWAP and my second target to be the multi-day. And that stuff has been on fire. And then if you put in your opening close from the previous day, so that's a complete earnings reversal. So you have to go from up big bucks, you make it back to VWAP, go back down to the multi-day, and then you're going back down to the close from the day before. Those are beautiful trades. That's a 90% trade or more on earnings, one direction or another. If you gap down, opposite's going to occur most of the time. There's some exceptions. FedEx was an exception. Gap Stores was an exception. The exceptions do come, but I also know what VWAP is telling me. So VWAP told me not to get into that Gap Stores trade recently. And there was a time where that FedEx trade I wouldn't have taken because that's not exactly, VWAP wasn't telling me to do it, but I also knew when to get out of it because VWAP said it's still going back down. The other thing you can do too when you're talking about this VWAP trading is you don't have to wait for a VWAP break necessarily to get into here. So I know right here is with this Apple trade, we're moving up, we're breaking ranges, right? So we broke this range here, and next range kind of looks like right here for the VWAP, right? So I can get in this trade somewhere in here as an early entry to see what's going to happen. Is there an opportunity for me to roll over? There absolutely is an opportunity for you to roll over, but you already have, in this case, 30 cents. If you're buying here at this range break, actually you have more than that. You have 50 cents right here from this range break to VWAP to play with. So if you start to roll over, you can take your out at 25 cents, knowing that you never want to stay long an equity that is below VWAP, and you're still making this a profitable trade with the opportunity for this to go from 124.50 to 127.50-ish, 127 range. So you can get an extra 50 cents out of the trade too, which is what I was kind of doing with FedEx when I called the little bottom on that as it kind of moved up. So I'm looking for earnings calls. There aren't any right now, right? So there's no earnings going on at the second. So what am I looking for? I'm looking for stocks between 10 and roughly $35. There's some exceptions. One stock called Jemima, which is JMIA, is I think it's trading at $45. Had a big gain today. PLTR, the spaces, the EVs have been good. NEO, El Jefe's been rocking that one on how that sucker's been working out. But FSR is in there. XPEV is a little bit more expensive. Any IPO right now has been on fire. But you just kind of build your stuff, like FireEye, PLTR, space. If you see some things that are moving on in the market or whatever scanner or tickers you have going on, and you see something that's in that price range, right now they're all moving. I can't tell you exactly what they're moving today or tomorrow, but VWAP can tell us and make that trade appropriately for those things that are going on. So find your go-to names. I've been trading, like I said, a lot of PLTR and space. That seem to be my two that I've been, doing really well on. Mara and Riot have been some other things that are going on. I know people are getting interested in BlackBerry. How do you make money on BlackBerry at a $7 stock? It might even be lower than that now. You do it with VWAP. You do it with a shit ton of shares. A shit ton of shares. Most folks have $7,000 you can put in the market at defined. So could I make a shit ton of money on could I make my day's pay today on Bollinger on BlackBerry? Opening candle, nope, not ready yet. Oh, got a break right here. So 780 or 687. I'm back. I'm retesting VWAP here. 87, 97. So around $7. I'm getting out of 200 shares. 200 share movement at $17 or at 17 cents is, what is that, $34? Not a reason to get out. Maybe at another 10 or 15 cents here. Probably at 10 cents, I would have took another 200 off. And no reason to get out yet. 5 cents, you take another 200 off. You took another off here at 10 cents. So 20 cents. So the answer, yeah, I could have made a day's pay. I could have made almost $300 today trading BlackBerry at 1,000 shares, which is roughly a $7,000 that you need to make this, because you can define your trade, define your risk. The last out here is at 737. And then as things moving up and down, you're using VWAP as it's moving along, and the last as your stop, because now you're becoming profitable even at the VWAP out. So 687. Even if I got stopped out, these are all profitable trades. So does that help at all with the ticker?
Oh, absolutely. Have you been getting a little spicy and jumping into those like S triple Qs and SDAO, you know what I mean?
Triple Q is what I like to buy, right? So I'll give you a good story. I recently took a class for investing. It's part of my MBA thing. It's not anything fancy, but you have to do like a portfolio, right? So just to mess around, I think that started like last October when we had that sell-off on SQQ. I just held like 100 shares of SQQ as a hedge throughout the whole thing. And I went from like $24 down to, I think it was it $12 or $14, whatever it is right now. So Rob talks about time decay and theta decay inside those. It's real. So I don't really mess around with that too much. I do trade UVXY, which is the exact same things for talking about the VIX, but I'm in puts all the time for that sucker. As soon as I think that we're at the very top of whatever low is for the day, so I see QQQ or SPY putting in a low for the day, I'm buying UVXY puts, and that's been pretty successful for me. But I don't mess around with SQQ too much. TQQQ I will. So if I see a bottom being put in the Qs, I'm not ready to buy an option because I don't want to pay attention to what's going on or deal with theta decay, especially if it's like at 11 or 12 or 1300 time frame where I know there's going to be some chop in here and I don't want to get chopped out on my position. I don't want to spend $306 for a share of QQQ. I'm a little more comfortable spending 165 or 175 or whatever it is for TQQQ. And then I'm putting my, especially if we're below the multi-day. If we're below the multi-day, we're red and we're below VWAP. As I see that action move up, as I'm getting ready to cross VWAP, I'm buying below VWAP. I have my first stop out at even for the day, and then my second price target at the multi-day. And that trade has been awesome lately. All right, man. I think no one else has any questions right now. We'll wrap this sucker up. If you got any questions in the future, just hit me up on Messenger or whatever, and I'll answer whatever questions y'all got whenever you got them and try to help you out the best I can.